Hello everybody, this is Bitcoin and this is the final video guys where I'm going to be talking about the correction. So the first three videos guys were about the topping process, the last three videos have been about the bottoming process. So this is the final video about the bottoming process, and it's probably going to be the most interesting one because I'm going to cover several different things that in my opinion not many people talk about. So it's not just going to be classical TA. So from all the other videos that I've made in general, the ones that I talk about other data outside the trading realm, the outside, let's say, the technical analysis realm, it's just going to be very, very interesting, and there's tons of information in there. But before I get into that, guys, because I've made all those videos, you can watch them all one by one. It's just a ton of information, so it's about 3 hours long in total, so I know it's pretty long actually. However, in my opinion, if you really want to be able to analyze these situations in the future on your own, to just find bottoms, find tops, I give you plenty of tools and ways of thinking about these situations. So not every one of them is going to be the same, so all of them are going to have their own differences. However, the way the market works does have some things that are pretty constant. Okay, the psychology, the structure, so many things tend to be very similar. Although there are changes through the years, through time, overall there are some pretty important similarities, and that's what we are looking for here, and that's what we are analyzing. That's what I'm trying to give you guys. So let's start with the open interest, because it was something that I want to talk about quite a bit because people have asked me. And here's the analysis, guys. Well, first of all, we can see that there is a very, very huge difference between the open interest since, let's say, this top right here and the way the market moved. So usually what we want to see is open interest go up as much or less than the market is going up. So if the price is going up, let's say 50%, we want the open interest to grow by 50% or less, because that tells us that most of the increase doesn't come really from speculators. And the truth is that in that situation right there, we didn't have too many longs gathered in the market. We never had the proper shakeout. So if we look at that, since that top, the market probably moved about 140%, the open interest moved about 140% up, while the market moved about 55% up. Okay, that's a very, very, very big difference between the two. And if we also look at the open interest on the coin margin swaps, now on Coinalyze, which is one of my favorite websites, they do have a bit of an issue because they have open interest for stablecoin margin contracts, which is this one, which is actually the coin margin contracts, and the top one is actually the stablecoin one, not the coin margin contract. So if we also look at that one from here, it had also moved up substantially. It was also up about 40%. However, on that one, we want the open interest to stay flat, because essentially this one is moving up along with Bitcoin. So the open interest had moved up substantially, and especially if we look at this peak right there. So overall, the open interest had gone up quite a bit. We kept seeing the open interest go up, and essentially that was the main inflows that we had. Most people started speculating on MicroStrategy buying Bitcoin, on Tesla buying Bitcoin, on corporations buying Bitcoin. So essentially there was just a narrative that was kind of front run rather than proper adoption of Bitcoin and other cryptocurrencies. Now, of course, other cryptocurrencies had a lot more fundamental reason to rally. There were more inflows and other stuff like that. But at some point, more and more money started flowing out of the Bitcoin market and into other crypto assets. So once we had the first drop, guys, we started seeing some of the cracks right there. We didn't really see any follow through in the price action. And then as the market was going down, we finally got our crash. And maybe on some crashes, the open interest might not go down, but usually the crash happens because the open interest actually goes down. And from the peak, you can see that currently the open interest is down 65%, whereas the price currently is only down 35%. So at the moment, the market is in a much healthier position. Now the people that are long are much stronger hands. They are not just the typical speculator. We have a much better correction. And you can also see that in this situation right here, the coin margin contracts, we kept having more and more people actually being long, at least more Bitcoin being deposited to go long, to buy the dip, and that essentially got all crushed in one go. So once you see that crash, you kind of already know that things are good, but until you see it, you're way more cautious, because the more that grows as the market goes down, the more likely it is that you're going to get the crash afterwards. So once you got the crash, after, like I said on the previous videos, once the market chops a little bit, then we do know that we're finally going to have a nice bounce. So the other thing that we can see, guys, is the funding on here as well. And I'm also going to look at the long short ratios. So once the funding goes down so much, whereas the previous times it was just going up a tiny bit, usually that results in a pretty big upside. Now, I don't know if this situation is just like the March crash. It is possible that it is. However, I would suggest that people should be cautious this time around, because the market conditions are pretty different in terms of when this is actually happening, and the way the market has turned is not the best way. It doesn't look as healthy. Now, there are many reasons to believe that this is the final bottom. However, after such an event, I would just say the market will potentially chop a little bit, maybe between the 35, 30, even 33K region, all the way up to 47. So I would probably expect a little bit more chop rather than a massive upside from here. It just doesn't seem very likely to me. But I also wouldn't be surprised if we just make new highs at some point. But I wouldn't expect the new highs to happen, let's say, in just a matter of days. Now, like I said in the previous video, maybe altcoins have topped and that money will slowly start flowing back into Bitcoin, as usually that's what happens after a really big alt season, because you usually have first Bitcoin goes, it bottoms and rallies, then you have alt season around the halving, then you have the Bitcoin rally to break the new all-time highs, then after we get the new all-time highs, we get the alt season, and then after that alt season, we have a correction. Usually, like most of these things are followed with correction, guys. There are corrections between the transitions. The transitions don't happen smoothly. So once the transition happens, we do have the final phase, at least where we have the Bitcoin rally, then we have another alt season, and then it's the end. We just have a proper bear market. But for now, I'm not sure if this is a bear market. It might be. It's a tricky situation because we haven't had a very similar situation before. There are many signals that are indicating a bear market. But for now, what I would say and what I would focus on is that once you have that very big sharp drop, then usually you are going to have that nice bounce eventually. So although the funding, or at least the aggregate predicted funding, at some points it go green, that doesn't really mean much because we are coming off such a period of such low funding. So once you have that big drop, if you haven't gotten in anywhere within that drop, then the best time to get in is usually around the time of the second little drop, which is usually just a tiny drop rather than a proper correction with follow through, because we've already had the explosive move down, or at least the major crash. So the other thing on this one that I would look at is the long short ratios, because right here you see the data is not proper, it's not really fully complete. But anytime we really had the long short ratio drop so much, it usually was a bit of a bottom. Okay, so we can see that all the time, and currently we have gone really low, and there is a chance that the long short ratios might keep on dropping, and that's because, you know, even on the upside, some longs might start closing very quickly. Maybe we have more shorts thinking that that's just a dead cat bounce, so there might be acceleration to the upside, all that while the long short ratio remains pretty low. So if we have a look, for example, at this period, we did have long short ratio stay very low. Now that the longs have been properly crashed, then that essentially changes the equation substantially, because we had those major increases. We've never had the proper shakeout. When the long short ratio goes up to 4.5, That's not healthy at all. It's not healthy at all, and we did pay the price. As you can see, these are slightly different between the two, but that's the best way you can track the long short ratios on Binance. Maybe that includes other accounts as well, maybe Bybit, but it's mainly just for the Binance perps and potentially Bybit as well. Now, if I look, for example, at stuff like OKX on that long short ratio, we can see that we had such a big drop for longs. Usually we had the bottoms between 0.6 and 1% for OKX. Maybe some of them happened a little bit lower, but when we had the really big run up, the long short ratio stayed below 1. And this time around we reached 2, which was the highest we have ever seen in this bull market. That was an extreme ratio, and as that ratio was going up, the capitulation followed. And once you see that ratio go down, or at least go down substantially, you know that potentially you can have more upside afterwards. Of course, this is not something you can easily use to just see when the capitulation happens. I would suggest that you mainly focus on the data regarding the funding and the open interest, because then you can also kind of project that on the long short ratio as well. For example, if we look at the stuff on Bitfinex, I have some ratios on here. XRP is looking pretty healthy because the long short ratio of XRP is now near 1 on Bitfinex after being really high, sky high. Same for LTC, the long short ratio is dropping substantially. The Ethereum one is going up, not as healthy. EOS staying flat. So that's as much as I would say about the long short ratios of altcoins. I've spoken about the Bitcoin long short ratio. So I'd just like to get more into the premiums of futures. I'm also going to talk a little bit about the perpetual swaps. I've already mentioned most of the stuff, so I'm just going to make a little recap at the moment. So when you see, guys, the perpetual futures, the perpetual swaps or the futures get completely out of whack with the price, the spot price of Bitcoin or any other asset, that's a pretty big sign of capitulation. Okay, maybe either capitulation or maybe that things are really, really overheated. So whenever the price of Bitcoin reaches, the premiums reach a 10% or 12% on Bitcoin, that's usually a sign that the top is near. But if we have the exact opposite, and maybe even if the premiums drop at -5% or let's say even -10%, essentially the discount hitting 5 or 10%, then that's a really good place to start buying. Now with these ones that I'm looking at, I'm mostly looking at how the average has been moving. But like I mentioned in some of the other videos, you can clearly see that there was a pretty sharp capitulation on some of those. Some of them didn't really behave totally irrationally, but some of the others actually did. And there were some that went into pretty steep discounts. Some of them lost their 5% premiums very, very quickly. Some have actually had pretty steep capitulations, -5, -10%. We have seen that happen several times before. Usually it's not a good sign when we have the premiums keep falling lower and lower and lower along with the price. It usually is a signal that the price is slowing down. Now, it all depends on which exchange you're looking at, because some exchanges have had really sharp drops even on the futures. And in my opinion, the main one that you should be looking at is how perpetuals are behaving, because in my opinion, this time around, the main capitulation happened on the perpetual futures, not on futures themselves. Okay, so the swaps were the ones that actually had the main problem this time around, and it's where most traders were more leveraged, because I think the leverage to an extent was shaken out on the previous big dumps that we had. So people were more cautious. There was less open interest on those futures. So on the swaps, there was a lot more open interest because people hadn't really been shaken out in the same way. And we could see that there were so many longs when we were looking at the funding rate. And now we kind of know that the biggest part of the capitulation is over. So whenever you have those signals, you can have those on the side like I do. So for example, I do have a tab with all the rates. So I do know, like, if something goes really out of whack, like if things are below 1,000, because I multiply them by 1,000, I do kind of know, for example, that things are not going very well, at least for the futures. Now, some of the other ones, are not about futures themselves, but they have to do with the Coinbase Premium versus Binance, or the Coinbase Premium versus Bitfinex, because these two exchanges, like I mentioned, Binance and Bitfinex, have more leverage, whereas Coinbase doesn't have it. So Coinbase can be considered more spot price, maybe institutional, whereas Binance is more retail driven, more leverage driven, and so on. And down below right here, I have the essentially the perpetual swap. So the swaps versus the spot price, and that price really did get out of whack as well. So the more times you see these things happen, the more likely it is that something is about to bottom. Now we also saw the premium on Korean exchanges go up while the price was dropping, which was not the greatest sign immediately. But now that it's collapsing, it's a pretty good sign. It's dropped about 10%. Now, I apologize for the sound my cat was making, but the video must go on. The other thing that I noticed, which is pretty interesting in my opinion, is that the GBTC premium actually went up while the price was going down. So the GBTC premium has already started going up a little bit a few days ago. So maybe we start seeing some big players buying the dip at the moment. Okay, so these deep buyers, maybe some institutions as well, so they started buying GBTC because they could. It was also cheaper, and that might have been a sign that the bottom might be near. So these are the stuff that I want to mention regarding certain key indicators that I have on TradingView. So now I'm just going to move on some other ones, some more like a little more special indicators, I would say, which have to do with the fear and greed index, some stuff that are on Willy Woo's website, which is pretty cool. So this Woo Boo website, and I'm also gonna look at some other stuff on the buybitcoinworldwide.com, which was digitalic.net prior to that. Okay, so let's get straight into it, guys. Now, the fear and greed index had a pretty sharp increase very early on after that massive capitulation, okay, in March of 2020. So that back then it stayed low for quite some time, and then it had that very nice increase. And once it went into the euphoria zone, it did stay in the euphoria zone for quite some time, but it was clear that it wouldn't really last forever. Of course, things can stay irrational more than you can stay solvent, and the market can be very irrational for long periods of time. So it doesn't mean that because we hit that level right there that we have bottomed, because we have seen a lot of fear in the market before, like in August of 2019, like we saw in many other periods before the capitulation in 2018 as well. And maybe this time around it's just the beginning of a bear market or a mini bear market, because like we saw in June 2019, when we got up to 90, those values right up there, we did have a big drop. Maybe this time around it's a little smoother, it's a little less important, but the key thing right here is that we did go all the way up to 90, 95, stayed there for a really long time, and then the market started losing its confidence slowly. Some things didn't go as well. Things were slowly turning bearish. That kind of lower low here on the fear and greed index, the third one, was a little bit of a signal, because the market was also making lower highs and lower lows in terms of its belief in the bull market. And then we just had that massive capitulation down to 11. So once we started breaking more and more lower, the belief in the market was turning more fearful, like the market, the sentiment was turning more fearful. We did have that leg down. So that was when we had that massive capitulation. Once we hit 11, that was the main thing. So again, it just comes down to sentiment. If you just were watching at what people were saying online and all that stuff, it's good to be a good observer. So the more people were really not fearful, they were just very greedy as the market was dropping. That was a bad sign, because the correction was going to be deeper, to shake all of these people out. And then we had that very fearful moment where everyone was kind of scared, and then we went up a lot. So let's look at some of the models, guys. And I've made some calculations because I think it's very important to keep some notes on these things. So whenever the NVT price has dropped below the price of, when the price has dropped about 50% below the NVT price. This has been a pretty good place for a bottom. Otherwise, usually what I've observed is that the NVT price, whenever the NVT is about 1.5 to 2.2 above the actual price, then that's usually a bottom. I've done similar calculations with several other indicators as well, but the main thing to notice here is that currently the price fell about 1.8%. One was essentially the NVT price was about 1.8 times the actual price of Bitcoin. Okay, so these are various price models that Willy has on here. You can look at the realized price, VWAP, the top model, which we didn't really touch, which was kind of weird in my opinion. Then we've got the CVDD, we've got the balance price, and you can study these at some point. Then we've got like the delta price, but the main one that I would be focusing here is the NVT price, because if we start getting below those and maybe get down to the VWAP price, that means that we've already dropped substantially. And that would be very weird to me, because currently the market is really undervalued. It's oversold by all metrics. It actually got really oversold, and no matter how you look at it. And maybe we are in a similar situation like we were with this bottom right here, because in the bull market we had never really dropped so much before like we've had this time around, which is very weird. Maybe it does indicate that we have a bit of a problem. However, in any way, whenever we have seen such a big discrepancy, this has been the bottom. Now the other one I would be looking at, the VWAP ratio, is just one that I would remind it actually called the top very nicely. Very perfect ratio in my opinion. Now that it's back down to 1.6, it's almost back to where the market was bottoming, or it fell way lower, because that's the actual price now, but this is calculated with the closing price, not the actual price of the low. So the fact that the price actually went as low as potentially 1.4, 1.5, then that means that we had a very steep capitulation, and we came at those same levels or even lower at the same levels that the market was bottoming in 2017. So at least if we're still in a bull market, this could be a pretty nice level to be buying. So sometimes you can compare those previous lows and start thinking, where should I be buying if this ratio gets to the X amount? So again, like when you see the price go X amount below the VWAP, or you see the VWAP ratio, the NVT, and then when you see the VWAP ratio get to a certain point, then it's a pretty good place to start buying. You just have your own estimate. Although these are not perfect, although you cannot do the calculation just on these charts, you can just do some math as well, and you can do the calculations on your own and just estimate the price. So again, the MRVR also gave us a top signal, also came all the way down to some pretty important levels that we have seen the market bottom even in 2013 and 2017. So maybe we have hit a rock bottom this time around, maybe not, we'll see. But for now, we have hit some pretty significant support and we're going higher. Now the mega multiple, we did get all the way down to the 200-day moving average. We actually crushed the 200-day moving average. You had a very big crash, and that's the truth. And we did get below the 200-day moving average, so the mega multiple actually went below 1. So I don't really know how much more can it fall from here, at least for now. I would be expecting at least a bounce now that the price is actually above the 200-day moving average. So we're probably going to judge the future later on. But the key thing to notice here is that once the price came to these levels, we did have a very steep correction, which didn't happen immediately, but at some point the whole thing corrected very violently. Now the other one that you can be looking at is the stock to flow multiple. You can track the stock to flow itself looking at this chart. Maybe you can study the ratios on the chart and see, like, okay, when the stock to flow was X and the price hit, let's say, X number, what happened? Usually, at least during the sideways market, after the bear market, or at least during the bear market as a whole, I would say, whenever the stock to flow was about, when the price was about 50 to 55% below the stock to flow model, then that was the bottom for the price. Now in the bull market, that was a little bit different, which essentially was about 35%. Whenever the price was 35% below the stock to flow model, the price would pump. Of course, I'm not saying that this model is perfect or that you should be using it to really project into the future, but it's just another valuation model that some people use, and we can use it to just track how overvalued or undervalued the price really is. So it's just a theoretical measure, in my opinion. It's just not perfect. Maybe it will break, but for now it has been working pretty well. This is the first time we have essentially broken below it for a really long time. We're quite far ahead, to be honest, if we compare this to the previous bull markets, because we didn't really have a correction. We just stayed above the model for a really long time. Now there is also the stock to flow cross asset model, which doesn't seem to be working as well, but so far it has worked in a more similar way to how it had worked back in 2017, because the other stock to flow model had closed above the price, whereas this one, the cross asset model, has kept the price right below it. So like in this one, it acted as resistance, and it has acted as a little bit of a resistance this time around as well. Again, you can do the calculations, you can estimate the numbers for yourself to see whether the price is overbought or oversold. But in general, whenever you would see that level come all the way down here, when the multiple would be about 0.6, which I think it actually happened this time around, or went even lower in the short term, it's something that you can use as a place to start buying. Again, once the price hit the same level, again, pretty similar with the major multiple, when it got back up to the 2019 highs, the June 2019 highs, we did have a very big drop. Once it dropped below 1, again, that's when the big crash actually happened. So sometimes you can see the S2F model as support, or the one line has acted as support. It acted as support at the 29k as well. So that was probably one of the other reasons that we had such a sharp bounce back then. So once it drops down to 0.66 or even about 0.5, then that's the best place to start buying. Usually, if you include the actual lows, the price goes even lower, but overall, we already know that the price is pretty cheap, and I doubt that it will go much cheaper right now. So if the model is right, that means we should continue to the upside fairly soon. Another one that did actually kind of predict a little bit of the crash was the major multiple price bands, because once we dropped below the 44k support that had the major multiple band that so far had held the price above it, it has acted as a pretty nice support and resistance level in the past. Then once we closed below it and we go into the bearish situation, we did have a little bit of a crash. Well, we had the crash, a proper crash. Now we clearly didn't get to the oversold level to just go below the 22k level. That's pretty far away. But maybe now we are kind of like in a bearish territory. The market has turned fully bearish until we get back above 44k. So anything can happen right now. But we did get, in my opinion, based on other indicators, we have gotten oversold in the short term. So maybe we do have an extra bounce. Now, some other indicators that somebody could be using is the golden ratio multiplier. It's not the perfect, you can't really find any perfect indicator, but I have found that this might be pretty interesting at times. It's not perfect, and I don't really like the fact that they have these things here. So I don't really, there are too many of those. I have closed quite a few of them. So for example, I do have quite a few of those. You want to find the top or anything, it just goes a little bit too far in my opinion. You can just use these ones. Mainly the 350-day moving average is just down below around 27k. We didn't really go down there because we just bottomed at the 300-day moving average. But maybe you could have used the 1.236 as support. Once we broke below the 1.6, we did have that extra capitulation, okay? So that 1.6 was very similar to the price band of the major multiple. So once we lost that support again, then the price actually accelerated to the downside. For example, the golden multiplier 2, it was also support twice, it was resistance, then became support. Once you started losing those levels, the market just accelerated. Now, some other stuff that I just wanted to briefly mention, they're not really that important, won't really have anything major to do with the current correction. The long-term power law, we didn't really get to see it touch the resistance above it. We bottomed way earlier. We bottomed topped 30k below the actual resistance. Now the support is actually at about 22k. Maybe we go even lower. Maybe we oscillate around that price. Who knows? But the long-term support currently would be around that price. So there are many things that would indicate the support is anywhere between 25 and 18k at the moment, which wouldn't be great because that would mean things are not going very well and we're in a proper bear market. Another one would probably be the Bitcoin power law oscillator. We can see that we did get quite overbought very quickly. So essentially we didn't really get enough corrections along the way. That happened very, very quickly. And overall, we could see that the market started turning days ago until we had that really sharp crash. So we did have that reversal on the oscillator, which could have been very helpful for us to predict the top. Same thing with the thermocap. Right now, this has gotten very, very cheap compared to previous price levels. But the truth is that this also shows a very similar picture with a proper reversal underway. So currently, most of the stuff, guys, are indicating that the market has reversed and that we are not in a great situation, but at the same time, we have hit some critical support levels. We have gotten really, really oversold, and potentially that could lead into a pretty nice bounce before we go lower. If we go lower, of course, we can be hopeful that maybe we can continue to the upside. Again, I don't really expect this to be a bear market like we had in 2017, 2018, 2019. I do believe it's probably going to be a lot shorter, maybe a little bit more like the June 2019 bear market when that started after the big run up to 14k and then it fell down to 4k. So that's it from me, guys. Thanks a lot for watching. Please remember again to like, subscribe and share the video. Leave a comment down below. Tell me what you liked, tell me what you didn't like. Also remember you can follow me on Twitter, on Telegram and TradingView as well, where I put more updates and share more ideas, overall more quick updates mostly. So once again, thanks a lot for watching and I'll see you on the next one.